Welcome to Buy, Hold, Sell. Today we're going to be talking about out of favour stocks with a couple of value managers. I'm joined by Steve Johnson from Forager and Marc Whittaker from Investors Mutual. We'll start with you, Marc. Bit of a bomb out not so long ago. Pact Group, buy, hold or sell?
Pact Group for us is a core holding actually, so it's a buy for us. It's had a bit of short-term pain. Obviously, input costs have been going up, resin costs are rising on lower FX, and also its customer base has been a little bit softer, so the top line's struggling a little bit. But what we like about it is we've got a new executive chair, Rafael Gamindo, who's come in, owns a big chunk of stock, very focused on getting the cost out program correct, doing it the right way. Good margin of safety on this stock, a 7% dividend yield, fully covered, fully franked, relatively low payout ratio, so a lot of headroom to cover that dividend if earnings continue to be a little bit soft. But we like it, in a good place, market leader in what it does, rigid plastics manufacturing, we like it, it's a buy.
Steve, there's no CEO at Pact Group at the moment. Buy, hold or sell?
That's never held us back really. I'd say hold on this one. It's actually not a stock that I know particularly well, and it's a space that I think you need some expertise and some fairly deep knowledge in terms of understanding the different technologies and different competitive advantages in that space, and there's quite a bit of change taking place from my understanding in terms of the different types of packaging that people are using for different products. So look, I think the price is interesting, and the yield is interesting for a pretty robust defensive type of business, but we don't know enough about it to put it in the buy category.
Alrighty, let's talk comparisons. Competitive space, Iselect, buy, hold or sell?
We're a bit in the same boat as Marc here. It's a core holding for us, so I'm going to say buy, but the price is up quite a bit from where we were buying it fairly aggressively, and we were buying it at a level where we thought we weren't taking a lot of downside risk. I think today's price, you need a viable ongoing business here to justify that price. We think that's likely, albeit not certain. The case for consolidation here is compelling. We've seen a lot of takeover bids come out over the past couple of weeks or so. This one's going to be, I think, there's going to be a bit more argy-bargy around price and things like that, but I think the case for putting two businesses together here, that there's a lot of overlap in costs. They're pretty dominant market players. I think, so compare the market as a shareholder now in Iselect, and I think the case for putting those two businesses is the cream on the cake in terms of getting a lot of value here.
Yeah, right. Marc, buy, hold or sell in Iselect?
Look, probably 6 months ago it was probably a buy. I think it was at a good discount to NTA. The trail book in the health and life insurance side of the business was probably worth 50 or 60 cents a share, I think. Trading currently 72. Is there enough margin of safety for us to buy this business? I've always been a bit sceptical about the business model and just how viable a business it is, and that's precluded us from owning it for a long period of time. And I guess a history of 4 CEOs, a history of never really meeting in his guidance has probably justified that position to date. I'd really like to see it at a reasonable discount to that sort of 60 cents valuation. If we could get that, then it would be interesting, but for us to sell at the moment.
Okay. Thorn Group, it's been the thorn in the side for a number of people. Buy, hold or sell?
It's been a thorn in the side. I think it may be one for Stephen as well. But look, it's still a buy for us. Look, we talk about margin of safety in stocks which are trading at deep discounts of value. Trading at about half times book, and you're basically paying for the equipment finance business, I think, largely, and that's about it. You're getting the radio rental business for free. It's an 80-year-old brand, serves an important need in the community, has a function. You're getting that for free. ASIC overhangs are largely in the past, and we think with new management, relatively new management, good conservative approach to doing business, we think it's well placed. It's a buy for us.
Steve, you've got a view?
So we own the stock, and it's a buy too. It's not without its issues, this business, but I do actually think it's a good example of a turnaround where there's been a fair bit of progress made here over the past couple of years, some issues that have been put behind it, a new management team in there, and importantly a new chair who we've had some good conversations with, and we think he's got the right strategy for the business. And you can actually, this is a business you can touch and feel. Go and have a walk around some of their new stores at Parramatta and places where they've got this new format, and I think there's a good chance of that actually being successful. We're actually more optimistic about the radio rentals business that everyone hates than we are about the equipment finance business. You've got access today. I think there are going to be problems in that sector with the speed at which it has grown. It has been sort of a bit of a saviour for this business because it's grown in an environment where radio rentals have been suffering. I would like to see them do something with that longer term, and that retail radio rentals brand becomes a potential growth engine for the business. It's hard for anyone to see that now, but I think there is a place for it in the world and that it can grow over time. So at half book value, it's probably I would have picked it as one of my turnaround stocks for later if you hadn't put it in the show.
Yep. Alrighty. Fletcher Building fell out of favour 12, 18 months ago. It's hasn't refound favour, buy, hold or sell?
There's a bit to like here in terms of, I think, the business itself. I just can't come at the valuation, so I'm still going to say sell on this one. You know, even if we assume that it's going to turn around, we couldn't quite get to, we think this thing, you know, normally with these turnarounds, you want to say, okay, in a nice world where it turns and it goes well, you're going to double your money or do better, and we struggle to come up with a scenario for that for Fletcher, so it's a sell for us.
Too expensive for Steve? Buy, hold or sell?
It's a buy for us. It's actually been a holding in our portfolios for some time, so I guess we're there, and look, we're happy to keep being there. Look, it's still the market leader in New Zealand, and we think the cycle in New Zealand is actually stronger for longer. There's a good pipeline of infrastructure work. The new government there has got a lot of plans around public housing, the Kiwi Build project, and that's really going to help prop up the cycle over there for what we think is the next 2-3 years. Look, the balance sheet's been repaired, so obviously post all this write-downs with the troubles in the construction division, they've raised equity, so they've repaired the balance sheet, so we've got some comfort around that. And there's also the strong likelihood of a couple of asset sales, the Formica business for over $1 billion ideally, and also the roof tiles business as well. So that really puts the balance sheet in a very strong position. And as we say, new management as well, a good cost out opportunity, a bit of a turnaround in the Australian business as well. That gives us some comfort that the stock here is reasonable value. It's reasonable value, so we're happy to keep holding it at these levels.
Okay, last one, Isentia. It was a market darling and then fell on some really tough times. Yeah, buy, hold or sell?
Again, it's a sell for us. Optically and I guess on the face of it, it looks quite reasonable. It's one we've looked at for a long period of time, or over a long period of time, in many different ways. We've never quite got the conviction to own the business. Again, similar in a way to Iselect, just continually disappointing. And I think for a long time they were actually just over-earning. I think that the margins they were accruing at the expense of their content providers was just way too high, and the prices they were charging to their customer base was just way too high. So we've had a reset in a way, but I would question whether the reset's seen the whole way through. And you know, you've got competition and technology coming in, which is arguably disrupting the offering as well. So a sell for us.
Steve, Isentia, cheap on face value, buy, hold or sell?
There's a very important comment there about over-earning, and I think that's something to really look for in all of these situations. You know, was that level of profitability ever relevant? And with this stock, it's clear that it wasn't. We've been pretty negative about it for a long time. Not only is pricing under pressure, but market share is under pressure, and it's going to keep doing that. So you've got a big competitor here, Meltwater, that's looking at the market and going, we're prepared to throw some money at this. I also think the technology, there used to be a bit of a competitive advantage here that you needed a whole bunch of people to read newspapers and watch TV and put it together. And if you had all of those people, there wasn't much point in someone else doing it. So much of media now is online, and you know, you might be in a newspaper somewhere, but your online presence and your social media, and they're doing all of that stuff, but it's far more competitive, and there are probably people doing it better. So I think there's a lot of contraction in revenue still to come here before you've seen the baseline. It has fallen a long way though, and it's getting much, much closer to a level where we're starting to get interested. So look, I'll still lean on the sell button, but the price is getting more interesting.
Alrighty. Well, if you're going looking for stocks in the bombed out sector, tread carefully because there might be a few grenades.